Hi, everybody. Hope you're doing great. Great to be in Dubai again. So what I want to talk to you today is about how can we get traditional assets onto DeFi, right? So there are several, in crypto, there are several asset classes that are clearly on DeFi right now, right? So any crypto assets are on DeFi. But at this time, traditional assets are the majority of the assets in the world, right? And how can we get them onto DeFi? So let's talk about that. So first of all, let's talk about CeFi, which is the opposite of DeFi, centralized finance, which is the world in which banks govern and control people's assets. Of the traditional assets, right? Traditional asset classes. Now, DeFi, by contrast, where you can build new instruments, and this is what DeFi is all about, right? You can put a bunch of new tools, new protocols, new ways to pool assets together, new ways to make additional profits and so on, right? Now this is a place where we're seeing more and more traditional assets, right? Art is now being NFT. You can put that onto DeFi, right? And then you have all kinds of transparency happening, and this is what we want, right? We want for traditional assets like real estate, oil and gas, different commodities, to have the same type of opportunities, right? So, some examples of DeFi, just to run through what DeFi is, because DeFi means a lot to a lot of people, and some narrowly define it as you can trade different trading pairs, and some narrowly define it as a place where you can get loans, you can stake your crypto, but in reality it's all of those things, right? Decentralized finance is a way to do finance in a decentralized manner, right? And so anything that's an antithesis to the bank-governed finance. So some examples is, for example, a lending protocol like MakerDAO, where they're using our token to vote as a part of the DAO protocol, and you can create a stable coin which is backed by crypto assets. Recently, MakerDAO announced that they're also going to be putting traditional assets as a collateral for their DAO, right? So that's super interesting. You have obviously DeFi exchanges, which is the way that we can trade much more efficiently than traditional exchanges, right? We saw this during the whole GameStop situation, right? Where Robinhood supposedly didn't have enough liquidity, they had to close the exchange, right? Everybody was trading all these stocks, right? And then they had to close this traditional trading platform. Why? Because they kept borrowing dollars to provide to their users, and then they just couldn't borrow anymore, right? After borrowing trillions of dollars, they couldn't do it, they had to close the trading. In the DeFi scenario, right, in the DeFi exchange, you have a lot of users that collectively pool their resources together to provide liquidity, and they are incentivized for it. And that's, ladies and gentlemen, is where I believe all the traditional exchanges are going to go in the future. Whether or not they're going to be decentralized, they can use the same type of mechanism to provide liquidity when it's urgently needed, right? You can do the same type of mechanism working even with traditional institutions such as banks, pooling their resources together, or getting lenders together. So it's something that I think we're going to see in the next 5 years. Now, we do have traditional assets trading on DEXs already. So a company called Realty, they issued security tokens on a platform called Uniswap, right? So they're actually, the way that they're able to trade on the decentralized exchange, it's a highly regulated and compliant product, is that, DEX, what is DEX? In general, it's a place where people post, something for sale and buy and sell, right? It's like a marketplace. You can set up a market outside of this hotel, right? And like two people meeting each other, exchanging something, right? You can go to an NFT gallery and buy a painting. That's what a DEX is essentially. So as long as the buyers of this new security on the DEX go through KYC and AML on a compliant platform, these sales will take place. Right? Now, stable coins that are already mentioned, the ones that just died, is also part of the DeFi world, right? So how can traditional assets get on DeFi? Well, they do that through a process called tokenization, right? Now, before NFT, we talked about tokenization as a securitization, right? Now, I'll kind of go through the nuances here. I just want to give an example of the real estate world and how big it is. It's much bigger than the crypto universe at the moment, right? $300 trillion in property, but only 1% of that is liquid, meaning there's a huge opportunity for us to put real estate on DeFi. Now, in real estate, you have commercial real estate, and you also have private or residential, right? People's homes. Now, in commercial real estate, the investment is usually done fractionally, right? You don't normally go out and buy a hotel, you buy an apartment, you can invest in it, right? So, blockchain has become very, very mainstream with governments and regulators, right? That seems like that's all they work on all day long. Like what to do with crypto, what to do with blockchain. This is good news for us, right? It's becoming an acceptable way to collect, to fundraise, to transfer assets and so forth, which is incredible. This technology is barely 11 years old, right? And it's already a part of our finance. Most banks use blockchain. That just goes on to show you how transformative it is, right? It took much longer, I think, for the internet to penetrate every facet of our economy, our finance. So I used to do these lectures like a year ago, 2 years ago, and I would say, well, tokenization is two things, securitization and digitization, right? Because, in the pre-NFT world, we're kind of thinking, well, you have an asset, you break it down into parts, you securitize, and then you digitize, meaning you digitize ownership, meaning you record ownership on the blockchain. Now, in the post-NFT world, I think I'm going to change that definition, right? Where tokenization is really just digitization. Sometimes it's a security, sometimes it's not, right? So, in my world, with SolidBlock right now, what we've done up until today was create digital security tokens, right? That's how we would put assets on the blockchain. We put a hotel on the blockchain by creating a security, a financial instrument, and then recording the ownership of that security on the blockchain. Now, in the post-NFT world, you can put your whole apartment on the blockchain by issuing an NFT, and likely it's not going to be a security. So, how we do tokenization, why we need tokenization? Well, it's obvious, right? If we want to trade something digitally, we need to digitize it. Now, in this world, or in general, what is an NFT? What is a security token? You just take rights to an asset, right? Ownership rights to an asset, convert it to digital tokens, and now you can trade. And on top of the trading, you can do lots of things with them. That's what I want to kind of leave you with today. There's much more than the trading, right? But beyond that, just digitizing the asset will make it more attractive to investors, because now you can sell it all over the world, right? NFTs are sold anywhere, right? It makes the asset more valuable, in fact, right? Because now many more people have access to that asset. It's much more valuable, and you can attract global investors, right? So, my world is the world of a security token offering, which is a compliant process of taking a large asset where you want a lot of people, a lot of investors coming to one place, and you want to record your ownership on the blockchain. So that's a security token. We do that in the US under exemptions from most regulation. It's called Reg D 506C. And then we sell these securities on exchanges that are compliant and are authorized to do that. In the world of NFTs, it's much easier if you can prove that the specific NFT you're issuing is not a security. That in that world, you have many more possibilities, many more exchanges to trade, and just really, really So, very quickly, how you digitize? First of all, you need to create a vehicle, so sort of an entity which will hold the asset, right? It can be a corporation, it can be some sort of a setup. Actually, it can also be just a contract, right? That's something that we see a lot with NFTs, is where you have a contract of sale and you can tokenize that, right? It's legally it's acceptable, but it's not as bulletproof as an entity. I prefer to have an entity that owns an expensive asset, because then you can claim that entity much easier than a contract, right? So you have to have a platform where you can onboard investors, right? In most cases, because even whether it's security or not, you want to have KYC and AML, know your customer, anti-money laundering, right? You want to undergo those processes, because at the end of the day, you will eventually also need to go into the real world at some point, right? You may hold your assets in crypto, at some point you may want to withdraw them to a bank account, live in the world of fiat, and then that's when your bank is going to ask, about the KYC AML. Then you create tokens. How do you create tokens? Well, tokens are basically, are based on a smart contract. In the security token, you usually use a derivative of ERC20 contract, ERC1404, for example, is what we use for security token. NFT, ERC721. We have a lot of other new blockchains coming up and protocols coming up where you can issue these tokens. So in the smart contract, there's companies right now, like SolidBlock, that are going beyond the general text smart contract and also adding additional layers, like what is that company that holds tokens, that holds, the asset, where is it located, where is it registered, what is the compliance that was used, right? So we need to make sure that there's an unbreakable link between the asset that you're buying and your ownership, right? And finally, you can list it on exchanges, DEXs or centralized exchanges, whatever. So, Aspen Coin project is our pet project at SolidBlock, which we tokenized in 2018. The issuer was Elevated Returns, and $18 million was raised, and now it's trading on T0, right? That's an exchange where it's trading. Real estate and DeFi, or any real-world market, real estate was just an example, right? You can do the same with gold, silver, commodities, a lot of real-world assets, which really is the basis of our economy, our general global economy today. And so real estate or real-world assets and DeFi create opportunity for liquidity, for DEXs, lending, NFTs. I want to show you this, and probably I'm going to finish up with this. Okay, great. So, tokenization, this is how we get real-world assets onto DeFi. It has a variety of applications. Well, the obvious one is issuance and trading. That's how traders make money. That's also how we preserve wealth, right? We want to diversify our holdings, so we put our money in crypto, we put our money in traditional assets, we buy real estate, put our money in stocks and bonds, pension portfolio, whatever, right? Now you can actually have a combination of the two, right? You can buy real estate through the security tokens, where it still retains the advantages of the asset class, of the stability of the asset class, but it provides you also with an opportunity to trade or liquidity, right? Now, all the world of traditional finance, well, rather say alternative, it's funny how these terms are kind of overlapping. I was just at the Alternative Investment Summit, and for them, alternative means anything that's outside the stocks and bonds realm, right? So structured products, indices, index funds, derivatives, options, futures, all of that, you can do that with digital securities. Now, in the real world, most stocks, most companies like Amazon, Google, Apple are trading on one or possibly two stock exchanges. And in order to trade on two stock exchanges, these two stock exchanges have to talk to each other. There has to be a clearinghouse that can account for shares being traded, right? They don't want to sell something that they don't have in the inventory, right? So in the world of blockchain is that clearinghouse. That's why we have, liquidity pools, which is, probably, I think it's one of my favorite use cases with blockchain. So So imagine a world where you can list a security or even not, a crypto asset like an NFT on tens of exchanges, right? To give access to millions of people, right? You can collateralize these tokens so much more easily than you do in the real world. Like in the real world, you go and get a lien on a property, for example. You have to use a centralized place. You can't, usually can't do it sitting in your house in like 5 seconds, which is what you would do when your property is digital. You can collateralize that NFT, go get a loan, right? As easy as staking crypto. Put Bitcoin in a vault, start getting interest, right? Same thing you can do with your real estate in this world. And finally, you can connect to a bunch of other DeFi funding sources. Do we know what they are? Maybe we don't know. Maybe tomorrow we'll have a new asset class coming, right? I think that's it.